What's good, team? Welcome back to a brand new video, and today we are going to be diving into the CRT. All right, so how do I use it in my trading? How has it increased my win rate? Why is it probably one of the best things to ever exist? Well, first of all, CRT is meant for candle range theory. Okay, so my cat just absolutely went nuts. So the point of it is that each candle is its own range, right? Each candle has an open, a close, and wicks, right? So let's say we take a look at this drawn candle here, for example, right? This candle here is a bearish candle. It opened here. It probably went up to here, went down to there, and then closed right here, right? So a candle will open, will go higher, lower, and then close somewhere, or lower, higher, and then close somewhere, right? There's always going to be open, high, low, and close for every candle. Now, using that candle's body, I like to use the body as a range, okay? Which means that now I personally use this on either a 4 hour or daily, an hourly, a 15 minute, and whether I use it on some specific time frame will determine how I use it. So let's say we have a daily CRT forming, that'll give me my daily bias. Let's say I have a 4 hour CRT forming, that'll give me my, let's say, New York AM bias. Let's say I have an hourly CRT, that'll give me my bias for the next hour. Let's have a 15-minute bias, that'll give me my bias for the next 15-30 minute, right? Now I won't use a 15-minute CRT to enter a, let's say, swing trade, right? Um, but other than that, I think that pretty much defines the CRT. Now, what is exactly a CRT? So, as you, sorry, I'm a little sick. So a CRT is the first candle prints, right? It looks like this. It's just a normal candle. Then below this candle, you have some significant sell side liquidity. Now, this is a bullish CRT, and we're going to imagine that overall our daily trend, let's say, is bullish. So our trend is to go higher. Our trend is higher prices, right? Higher highs, higher low, higher high, higher low. Okay. Now that that's been established, we've established that let's say we have a low, let's say here, right? We have a low there, whatever. Doesn't really matter actually where. I guess it does matter, but we'll get into it. So we have a low here. Now, we expect this low to be swept, but we want to see this. This is our bias. This is what we want to see, and then we want to smack the entry here to target higher prices, put our stop at the low, right? Now, what does a CRT provide as information for us? So this candle forms the range, right? Brings us down. Every uptrend will have a retracement. Now, the second candle is the most important one. You can kind of like um categorize them as an A and D. So we have the accumulation in this candle, the manipulation down, and then this one here is the distribution, right? So using the CRT range, which would be the first candle, so this would be the CRT high, and then right here we would have the CRT low, right? So let me just write it, right? What I like to do is, let's say we're on the second candle and it's moving down. I always put CRT potential, and then if the candle closes, whatever, we'll explain that later. So you have your CRT high and your CRT low, right? And then you want to mark out the halfway point of the CRT as well, just like that, right? So now you have your high, you have your low, you have your halfway point. Now the second candle is the manipulation, which means the candle will open, sweep liquidity, ideally drop into equilibrium or OTE of the bullish range, the bullish trend, I should say, and then close back inside the range of the first candle. So it'll wick down and then close back inside the range. You don't want it closing here or here, even though there's the wick. You want it closing back inside the range of the first candle, just like here, okay? And then the third candle, you place your order on right at open of the candle, and you can put your stop at the CRT low and target the CRT high, and the halfway point is usually your break-even area. Okay, now how do I use it in my trading? Well, it's very simple. I basically just explained it, right? Let's say we take a look at this setup here on Friday that showed up, right? We have a bullish trend going on. We have the bearish pullback at market open. We have the return to OTE and equilibrium, and we have the CRT forming right here before sweeping this low, right? So big move down, the range has been formed. Candle sweeps the low, closes back inside the range, entry right at candle close. First TP at CRT high, which is right here, right? Oh, sorry, I was petting my cat. Let me mark it really quick just so everybody's clear on it. So TP right here at the CRT high, and then from there you can then target your London high if you want more further buy side, and then some more highs as you go, right? There was a high right here that got taken as well. So now that we've established what is a CRT, how do I use it in my trading? Well, it's super simple. I identify my trend, my overall trend on the daily, on the 4 hour, on the hourly, and then if they match, I form a bias. I want price to sweep this liquidity. I want price to come back down and then go back up. I want the uptrend to continue, and for the uptrend to continue, you need this little move here, right? You need this little pullback to create that higher high, higher low scenario, and ideally you enter at the low, right? You never want to enter a buy above equilibrium of the range, right? And you never want to enter a sell below equilibrium of the range, right? So yeah, ideally price sweeps this liquidity. Price is in the discount of the range to go long. It went into OTE. It closed back inside the range. A plus setup, send it all the way, right? Very, very simple. One of the main reasons why CRT is so goated is because it regroups a lot of ICT concepts without having to actively look for them, and it makes trading simpler. So, for example, if I was to go on the 1 minute, you could say, oh, well, we had a 1 minute break of structure, pull back for value gap, unicorn setup, move up, inverse for value gap, this and that, change it to say delivery, order block that. What? Dude, no. If a 15-minute CRT, that's enough. Okay, you don't need all these terms. You don't need all this complicatedness. All you need to do is follow the CRT. Now, I don't only use that to enter trades, but it's a good and simple indicator of, well, I should say indicator, but it's a good and simple kind of chart behavior that repeats itself, and it's very, very successful. And it's great to see as well. It's an extra compliments on top, right? So let's say I wanted to watch this CRT print live, okay? What does it look like? So we'll stay on the 15-minute, but we'll move minute by minute, okay? So price opens up, drops lower, right? Sweeps liquidity, starts pulling back up. Now, once you're nearing candle closure, we're 7 minutes from candle closure here. We start making the high. We're back inside the range. We start pulling back down. Now we're back below the range and the candle stops. Right there, you want to put your entry. Now, if the candle had closed higher, what would I have done? Well, you can either slap your entry, but if the RR is not good, so let's say, we'll take an example, right? Let's say price, you want to target this CRT high and price closes here. Now, obviously, this RR is really, really bad, but you get a big wick, and it's actually what I did on this trade here, right? So we had a CRT right here on the 4 hour on Euro AUD. Price came up, swept the high, closed back inside the range. You'll notice here that it didn't close inside the range, but that's because I was on Euro AUD. There's another pair that it did close inside the range, so I did count it, and we are in a bearish market, so it looked really good for rejections. So when I entered the trade here, I actually put my order because this was not great RR. So I targeted this first of all, and I also entered a little higher up here, right? What I like to do is I like to put equilibrium of the wick, and then when price starts coming close to it, I drop down some time frames and I look at what's going on and I enter. So I ended up entering somewhere around here for this trade, right? To catch a nice 1 to 2, which is not a big difference, but in RR wise, this is the difference between a 1 to 1.5, 1 to 1.6, and a 2R. So semi decent difference here, right? So I just keep it like that because that was the framework of the idea. And when I trade forex, it's a little different with fees and stuff. So I kind of assume that the order's a little lower due to fee. But yeah, other than that, guys, I think that's pretty much it for CRT, right? So with the right bias, with the right trend, with the right state of mind, the right narrative, CRT is honestly a cheat code to your trading. I think you should implement it. It's really, really good. Combine it with OTE, with equilibrium, and you will be golden with your trend, with your bias. Always trend, bias, drawn liquidity is the most important thing. And then you can have your CRT and you can have your EQ, OTE, whatever, right? If you guys like the video, please like, comment, subscribe. Follow me on TikTok and Instagram if you guys want. Join the free Discord as well. Links in the bio if you guys want to trade live with me every single morning. We're going on a rampage recently. We've been winning trade after trade after trade, going crazy RR every week, and doing it live as well. So if you guys want to tap in, links in the bio. I appreciate every single one of you, and peace.